Today we're digging deep into inflation, and the first thing that I want to cover is the Venezuela effect. I'm going to bring you some new information that has come out related to this country. The second thing I want to talk about is the debt limit in the United States right now. That's the big talk of the town. I will give you what has happened. And the third thing we're going to look at is the inflation uncertainty. This has been going on all over the place. You got shortages, supply chain problems. You've got people paying more at the store than ever before. And of course, all of this integrates and ties into what's happening in the stock market. So much to cover. Let's begin. I did the dirty work. I sat through some of the congressional testimony with Janet Yellen and our friend Jerome Powell. And it was a little bit of humor, but mostly boredom. And I wanted to show you one of the things that was said. At the beginning of this year, the Fed was forecasting an inflation rate of 1.8% for 2021. Asked how the Fed could get this so wrong, he said nobody could have foreseen what has happened. Quote, no one forecast that. He pointed out that the so-called blue chip forecast of prominent U.S. economists expected 2% inflation in 2021. Who in their right mind actually believed that? But anyway, Powell also denied that the Fed is overdoing it by keeping a key interest rate near zero and buying trillions of dollars in treasury bonds and mortgage-backed securities. Quote, I don't think so, he said. Central banks have far too often reacted slowly or insufficiently during a major crisis. So you got to remember, what the Federal Reserve is doing today, according to Jerome Powell, isn't really enough. They need to do more. Think about how crazy this is. They did not tell you that inflation was coming, and when it was present, they said it's only going to be a short period of time, so you don't have to worry. The expectation by basically everybody was that through this summer we were going to see higher levels of inflation, and then it would calm down significantly as we moved into September. I told you, September, and here we are now in October, and inflation has not subsided at all, and everybody, including Jerome Powell, is saying inflation will continue into next year. What does that mean for you? The high prices you're paying and so much more. Inflation may remain elevated, says White House economic advisor. So even the government themselves are telling you this. Understand how this impacts you. You're seeing this. Why? Supply chain disruptions plaguing businesses. He believes that once it sorts itself out, inflation will subside. Don't worry, because it's all being taken care of. But we know that isn't the case. We know that this is only a matter of time before it worsens. Underlying all of this is the magnitude of the printing that has taken place, the deficit spending, and the national debt that continues to grow. We've got problems from literally every single angle. I get it. There's a crisis. It needs to be resolved. But printing up money to buy mortgage-backed securities has nothing to do with helping regular people. That's all I have to say. Are we heading towards Venezuela, whether we are in the United States or Canada or the UK or Australia, New Zealand, and all others? Look at this. 1 million bolivars become one. 1 million bolivars become one as Venezuela recalibrates battered currency. That's right. Recalibration. Is that what they're calling it? You could see this coffee package right here showing you in the old currency 5.8 million bolivars, and now $5 or 5 bolivar and 80 cents. That's right. Just chop zeros off. When you've got a problem, you just chop the zeros off. This absolutely could be the case anywhere around the world by devaluing the currency. When you devalue the currency, you hurt regular people. Regular people will be hurt by this. Nobody else. Doing all of these activities, and by the way, let me just be clear, doing these different things is not positive for the general public. It always helps out the few in, really just showing you how it strangles the many. And this, of course, links to what we'll talk about in a minute for the debt ceiling. This debt problem, massive. But I digress. What about this? Stock and bond and real estate prices are all uncomfortably high. An economist says that the three major U.S. markets are all showing signs of severe overpricing. This is, of course, coming from, this is out of the New York Times, but it's coming from Robert Shiller. And that's the important point here. Doesn't matter. I pick up sources all over the place. But anyway, the prices of stocks, bonds, and real estate, the three major asset classes in the US, are all extremely high. In fact, the three have never been this overpriced simultaneously in modern history. What do you think? Let me know in the comment section below. Is this the most overpriced in history? Yes or no? And if you think another period of time is more, put that as well. Let's talk about this. Let's discuss. What we are experiencing isn't caused by any single objective factor. It may be best explained as a result of a confluence of popular narratives that have together led to higher prices. Whether these markets will continue to rise over the short run is impossible to say. Clearly, this is a time for investors to be cautious. Beyond that, is largely beyond our powers to predict. And they essentially get into what has happened here. They give you the indicators. For example, Shiller created the CAPE, which is the cyclically adjusted price earnings ratio. Today is 37.1, the second highest it has been since the data going back to 1881. That's terrible. And you see how excessive they have become. The 10-year Treasury yield has been on a downtrend for 40 years. They're showing you bond prices and yields move in the opposite direction, implies a record high for bond prices as well. Real estate, Case-Shiller, National Home Price Index, rose 17%. It's just giving you this, it's unbelievable. It's unbelievable how high real estate prices are, and I'll show you more about that in just a second, have a little fun with it. But all of these, he just goes on and on and on, talking about how excessive the prices are, the bubbles that have formed, and so on. But what does this ultimately bring us to? Well, the government needs to be there to make sure that everything's being taken care of. What about the debt limit? Because as they take care, they are expanding the debt. Debt limit brinkmanship could put pressure on the US AAA rating. This comes directly from Fitch. So they are the ones rating them. And of course, when you have a downgrade, that could put a real, a problem in the financial system, temporarily at least. We've seen this before with the US. And that has an impact in the short term. So this could be an issue, but I ultimately think, just like always, this gets resolved very easily by printing a whole bunch of money, by deficit spending, by increasing the national debt. I can't believe it, but they talk about the fact that they're unwilling to push the debt higher, and that presents itself as a problem when we should be looking at the fact that, hey, why are we spending so much money in the first place? Many expect inflation to continue to run high into 2022. Where will it stop? Originally, inflation was only supposed to run hot through the summer, and now we can see that clearly isn't the case. My message to you is to hedge against inflation wherever possible, whether that's your own personal food or whether that is your portfolio. Do everything you can right now. This was back earlier this year, May 11th, and you could see ARC's Kathy Wood predicts a serious correction in commodities. And just like everybody else, inflation exceeded the expectations. The problems, the bottlenecks, and everything else have gone berserk. We're way beyond that. And what's happening right now with people? What are they doing? Personal savings have dropped down dramatically, and this is directly correlated to the stimulus that has been handed out. You see those spikes? That's the stimulus packages. Here's a paycheck for you. Here's some money to spend. Here you go. And that gets the economy moving, but only temporarily. You could see the core PCE rate, looking at how high this had gone. This is something that you don't see too often, but when you have these real instances that end up spiraling out of control, it doesn't end well. It's unfortunate. This is chaos. Christmas prices will rise in Britain, truckers say. We know that that's the case. If you have been experiencing this yourself, hit that thumbs up button and we can all agree on this. Prices are rising. Hit that thumbs up button. All right? Look at this. This is literally a burnt down home, $400,000 US. It's outside of Boston. It's something, I've covered other instances before, but I just want to show you here that literally burnt down homes are selling for a considerable sum. Now, other areas you're going to see $1 million for something like this. I've shown you that before, but it's going on everywhere. And then a huge trend that I believe I've highlighted it so many times before, that this is critical to understand in what I think is the weakest link right now, and that is commercial real estate. PwC offers U.S. employees full-time remote work. PricewaterhouseCoopers, they are, imagine, 40,000 people. 40,000 people are going to be working from home. What happens to all those big PwC towers? What's going to happen? You've got many floors occupied by these auditors and all the people in those companies. What are they going to do with all that real estate? This cannot go on forever. Okay? You've got serious underlying issues. Now, I'm glad you stayed to the end because I've got something special that hopefully I'll be able to dig into deeper. You remember Bill Huang? You remember that? Archegos? Well, it doesn't stop there. Bill Huang acolyte Tao Li draws scrutiny after loss on big China bet. They were buddies. They invested in the same thing in this case here. The question is, what exactly, as it correlates together with, we saw Credit Suisse and so on with Bill Huang and Archegos, they were overexposed to it. They took some massive losses as a result. What about this company? We'll find out soon, okay? I will bring you the details you need to know. The Archegos capital boss and ex-colleague are said to have built GSX stakes equal to 40% of the stock, frustrating the short sellers, okay? A lot of detail in this article. If you want kind of the intro, I think, if this does continue to unfold, I will do a whole breakdown about it. I will give you more details as it unfolds, as it comes out. I'm going to give you what you need to know. There's of course a lot going on in China right now with Evergrande. Archegos was something that just highlighted the extreme examples of things in the financial system. Go back a few years, you had MF Global, there were problems. It doesn't necessarily need to be the exact same thing. What it just shows you is extreme examples that cause ripples in that financial system. And sometimes it breaks it. Sometimes it could take the beating. But ultimately, if you're too exposed, if you are not really diversified, you could get hit by one of these events big time. So that's my message. I'm going to leave it at that. What I want to know from you is, if you're not an insider already, why? Why aren't you an insider? It's free. It's available to you. I email you the video of the day 5 days a week so that you can get on this and we can get around the censorship and all that right here at this card or themoneygps.com. And again, if you want that money to rain from the skies, Helicopter Ben will visit you directly, but only if you hit that thumbs up button. Thank you very much for the support. If you haven't seen this video yet, you definitely want to check it out. I get into so much detail, a lot to cover in this one. Click it and I'll see you there.